See, pop out chat. Doing a little house cleaning here. Be right with you. And there we go. Awesome. Excellent. Let's move that over here. Fabulous. All right. Thanks for coming today. It is Tuesday. What is it? August 18th or 19th or something like that. Let's see. It is the 18th. Man, we're getting along. We're getting along. Today's video is about it's about odds. It's about options. It's about making choices, making the right choices, and it's more about commitment to how should I put it? Excellence, I guess, is one way to look at it, right? So when you see something like, you can win 100% of your trades, immediately you're probably skeptical. How can that be? Is there a way to take a trade where there's 100% certainty that you're a winner? Right? Is there a way? Well, the answer is yes, there is. But it really depends on the context that you're talking about, how much you're willing to win, what is that particular trade. I mean, there are a number of different trades where you can be a 100% winner, for sure. You've probably heard of arbitrage. Now, a pure arbitrage trade is, in fact, a winning trade. And a good example of that is, let's suppose that there's a stock on two different exchanges, right? And that stock represents the exact same company, but they're on two different exchanges for two different markets. Maybe one's for the London market and one is for the New York market. Same exact company. They've just issued it on two different exchanges in two different countries, two different time zones, the whole deal. But at one point, they could be trading exactly at the same time. Now, you would think that they would basically be in sync with one another. They may have different prices, but their relative price and their value behind it is the same. But there could be times where that pricing or the availability of knowledge or a number of different factors could get them out of sync. Now, in most cases, that difference isn't going to be enough to overcome things like commissions and slippage and other things, or it would be so small that it wouldn't make a lot of sense for you to take a position. But there are slight and small chances where the difference is large enough that if you had a position in both exchanges, let's say you had an account, one in the United States, one in London, and you had a position in both, or the ability to take a position in both, then you could buy one and sell the other at the same time when they have this difference and make money. That's called a pure arbitrage. And it happens every once in a while, and there are in fact institutional traders that are looking for those opportunities all the time. And they occur relatively infrequently, and then they're able to take advantage of them, but only for that very small window of time, and only if they're there on the spot. When I say a small window of time, I'm talking about maybe seconds or minutes. And only if you've already set up and you're looking for that particular stock to have that divergence. Very, very difficult to do. Arbitrages tend to really close up very quickly. Now there's another type of arbitrage that occurs, and it's a very, very similar situation. It happens in sports betting. Now, doesn't happen so much anymore because there's nobody playing any professional sports, or there's nobody watching them anyways, for any number of reasons. However, the bookies that are out there, and there are many, some of them are shady, some of them are legit, but they're all watching the same game and they're laying odds on those games. Every once in a while, not every once in a while, actually this happens much more than the stock example that I'm talking about. A bookie will lay different odds on, or two bookies will lay different odds on the same game and the same event. And there also is an arbitrage. And it wouldn't matter if that team that they're laying odds on won or lost, or the two teams. It wouldn't matter what the score, it wouldn't matter, any of it wouldn't matter. As long as there's a difference in the odds, you could take the difference between the two and you could make risk-free money. In fact, there are services out there that will do this for you. They will actually locate, multiple brokers out there, multiple bookies, and find the arbitrages, which happen almost every day. Risk-free money. You can, there's another way that you could be assured that within a strategy that you could be 100% confident that you will make money. Now, does that mean that, now that's a little bit different than saying you'll make 100% of every trade, or you'll have 100% winners. But is it? If you had a situation and a strategy where you knew that if you traded enough times that there was a 100% certainty that you would come out on top, what difference would it make if, one or two of those trades out of 100 were losers? If you knew that once you got beyond, say 10 trades, that you were absolutely guaranteed that you would come out on top. Now, under 10 trades, it might be a question, because just the variance that could happen. Sort of like, the best example of that would be the flipping of a coin, right? I can tell you that if you flip a coin 1,000 times, that the statistical variance between heads and tails is going to be so minute that your odds of coming up 50-50 are near 100%. Or if you're a casino and you have here's a simple example, the roulette wheel. The roulette wheel has 37 slots on it. Actually has 36 colored slots and then one green slot. And the colored slots are either black or red. And you can choose one or the other. So you would think, okay, I have 18 choices for black, 18 for red. Let's say I choose one of those and I win, then I get paid off. Except for if it lands on that green, that 00, then I don't get paid off. So you lose if you don't choose the right color or if it hits that one slot. So there is a one slot out of 36, which roughly translates to about 2.5%. So 2.5% of the time, even if you played 1,000,000 times, 2.5% of the time, you're going to lose. Or put it another way, the casino's going to win. So the casino knows that if you play enough times, that they're going to win. Why do you think that they comp you drinks, meals, rooms, shows? Because they want you to keep on playing, even if you win. They don't mind winners. They really don't. As long as they keep on playing, because they know that statistically, eventually, they'll take all that money and they'll give it back. So there is 100% certainty, and it works with virtually every casino game. And it certainly works with any kind of odds game where you have a definitive edge. You can say that really doesn't matter. As long as I trade 100 times, or let's say I trade, make 10 trades and they all fit this kind of strategy, and 10 trades a month at the end of the year, 120 trades, the odds of me winning will be a statistical certainty. Now, is it possible that you could lose? It is possible. Highly improbable. Something would have to happen. Is there a way that you could fix it even more so that, you couldn't lose? So that even if you lost, on the cases where you lose, you still win? And the answer is yes. You can do that too. Where is that possible? Where is that possible? Well, it becomes possible if you can locate a crack in the system, or an anomaly that is not something that is built into the system, but is built into just the being of the system, or the behavior of people. An example of that would be our ability to predict what's going to happen in the future. As a general rule, because we're irrational beings, when we predict the future, we tend to be a little bit more obtuse or excitable or irrational than what actually happens in the future. And this isn't like an occasional thing. This is a constant. It's almost a principle. So, for instance, if we were to predict what life will be like in the future, we could predict, this marvelous society where we're all driving around in, flying cars. As a matter of fact, they predicted that for the year 2010, or the year 2000, even back in, in the 40s and 50s. So they pick this irrational, or their irrational minds come up with what appears to be or is a plausible future. And it's always overstated. Always. And then we sort of regress back. The exact same thing happens in the stock market. Particularly in the way we price options. And even the way we price, virtually anything. When we price any kind of contract that has multiple future dates, the further away that we go, there's more uncertainty, so we tend to price it higher, has more value. In options, they call that added value, the time premium. Now, there is no way for us to be accurate on what that time premium is. Well, the accuracy is, however we feel as a mass, as a group. But the reality is that when we price things in the future, we tend to always overstate, just like we overstate with, the way we think life will be in the next, 100 years. What is life going to be like here in the United States, or where you live, in 100 years? Are you going to be flying around in cars? Will you have, levitating hoverboards, like in Back to the Future? we'll overstate it because our imaginations and our hope, our just our being, that's the way we are. We tend to overstate the way we think things will be or could be. And then they regress. So when I talked about the arbitrage before, that arbitrage was based on an overstating of one and an understating of another. And then by able to trade both sides of that equation, you can make money 100%. 100% of the time. Well, if I told you that in options pricing that there was a consistent overstating of time value, which is also called premium, and the way they measure this in options is something called implied volatility, then why can't you then also take advantage of that? That arbitrage. That is an absolute arbitrage that happens all the time. There's nobody going to fix it. There's no way for us to predict something that comes closer to what reality it is. It is just there. It happens all the time, no matter what. We tend to overstate the future and volatility, and therefore future contracts, future pricing is always higher. And when I say always, there are certain cases where it's not, but in general, always higher than what it ends up being. So we predict higher, and then the reality is on average, it comes back and regresses back to what it actually is. But you don't know about it until afterwards. You can look back at it. You can plot what you predicted for future volatility, and then actually plot what the historical volatility actually was. And they'll always, well, I shouldn't say always. Depends on the market, depends on the year, depends on the actual events of that year. But on average, it's going to be somewhere between 6 and 13% overstated. That's a big difference. That's a big chunk of cash that's sitting out there that you can actually grab if you know how to. 100% certainty, 100% certainty that you can grab that overstated premium, which is in fact money, and put it in your pocket. 100%. And in the cases where, there are some cases where I'd say about 10, maybe 12% of the time where that overstating is actually understated. And that's only in the case of huge market shocks, price shocks, say a crash or a big correction, which happen in very, very small slivers of time. And then when you go back and plot the historical volatility versus the implied volatility, because we didn't know that there was going to be a price shock, then you'll find that in those cases it's underpriced compared to what we had actually predicted. But it's such a small number of times that we know that if we trade enough times, that it wouldn't matter. It wouldn't matter if we had 10 price corrections in a year. We would still have that edge. On average, we would have that edge. It's as simple as that. I mean, it's just there. So that's what we do at asymmetric options. It's right there. We find that edge. We find a way to grab that edge. And not only, now, grabbing that is one thing. Everybody has a strategy for grabbing it. They talk about being a net seller of options as opposed to a net buyer. And that's one way where you collect premium. And even that has its risks. if you don't know exactly how to do it and stack the odds in your favor. And there are ways that you can stack those odds in your favor that even in the price shock, even in that price shock, you can actually make money. So in fact, when I said 100% of the time, 100% of the time, you can make money. You want to learn how to do it? Click that link below. Join us. I'll show you how. We've started this service on a good note, and it's basically, working out that way. We are now 100% winners on all of our trades, and I expect that to carry on. Fully expect it. As a matter of fact, there would have to be a rift in the universe. Some kind of massive rift that would just change the laws of human psyche to change this equation. You play enough times, and when I say enough, it's not a lot. More than a few times a month. You will 100% win 100% of your trades. Guaranteed. This is the place where I'm supposed to do one of those disclaimers that they say that you have to do. Future results can't be predicted based on past results or something like that. Bullshit. I can tell you 100% of the time you can be a winner. And I'll show you how. Just sign up. Super inexpensive. It'll take a little work in the beginning to learn and understand. Not a lot of work, but enough. You're going to have to let go of some of the things that you know now. Because what you know now is crap. If you're a day trader, you're a loser. And you know it. I know it. Everybody knows it. If you're a day trader, you're a loser. If you're trading Forex, you're a loser. You might win every once in a while. You think that there's a path forward. You're following some guru. You think that they know what they're doing. They're telling you about, this, I don't know. You can make this sort of percentage on this trade. It's bullshit. They're scamming you. They're frauding. They're committing fraud. You're day trading, trading Forex, trading stocks, scalping, whatever you're doing. You're a loser. I could show you how to win 100% of your trades and be a winner all the time without any stress. Without any stress. Simple as that. Come join us. Thanks for coming. Please hit the like button. See you next video.